Welcome to the Trading Lounge and the day ahead report, and here we're looking at the Dow Jones on a daily chart, and as you can see we're still sitting above the 13,000. We're still having the interpretation that the move down is corrective. But if the 13,000 becomes the retested resistance, and that means that the market needs to come through, it needs to retest it back up and fail and then roll over. Okay, so this over here, for an example, that came through here, went back up, retested. It sort of failed here, but didn't take out the low there in this case, and eventually pushed back up again. So what we want to see is a clear sort of resistance there, because at the moment it's testing it as support, isn't it? That's what's sort of happening there. And so when we look at this closely here, we've got this very sort of unusual triangle pattern here. It's a bit more shapely in the S&P 500, but we're considering it as a corrective pattern. As a corrective pattern, that means that this particular triangle pattern, this A, B, C, D and E, would be completed now, and would need to see a move up for wave 1 and 2 and 3 and 4 and 5. We should be making new highs here. That would be the general gist of it. But that said and done, we've got lower highs here. It could be interpreted as a bearish move, but when we've got two interpretations of such a pattern, then we just resort back to good old support and resistance, and that 13,000 is the resistance there. This is just the 5-minute chart here on the bounce, and this bounce here, it does, it at this stage here would have to call this, well, it can be an ABC rally, or it can be 5 waves developing to the upside. So 5 waves to the upside. This would obviously be the 3rd wave through here, the 4th wave through here. So it really can't come back down through here as such. And this would be the same for the S&P 500 as well, which is, as I mentioned, it's a little bit more shapely and everything. This is a 4-hour chart here, but we're calling it corrective because of this first swing in here being in 3 waves. It could be counted as 5 waves in terms of down for 1, back for 2, down for 3 here, and back for 4 and down for 5. So it can be done, but it just counts a little bit better this way. But look, once again, while that 1400 is the support for the market, then it's supported. It's as simple as that, and we just got to be patient and wait. So if we see a breakthrough of the 1410 here, then we'll know that we'll be going to the upside. And what we can be looking for now, because we've got more of a developed A, B, C, D here, but with an A, B, C, every structure would have 3 waves in it, and the same down for the E wave here. So we'll be looking for 5 waves up and 3 waves back. So when we're looking at this market on a smaller chart here, this is a 15-minute chart here, you can see that it's got the same as the Dow Jones. It's really got the possibility of making new highs. So we would have to consider this either wave 1 to here, wave 2 to here, then wave 1, wave 2, wave 3, wave 4, wave 5 to here. So there still can be like 1, 2, 3, 4, 5. It can still unfold further through here, but what we're looking for is we're looking for 5 waves up through here, and then an A and a B and a C here, and then further upside. So yeah, so that's what we're looking for. At the moment, it just reads as a corrective rally in 3 waves, not 5 waves. But if we do get a new high through here at the 1410 here, then we'll have the 5 waves. But also, I did mention in the report this morning that a breaking of 410 to go long. Sorry about that, because what will happen is that the price will come up into group 1 here, into 10, 1, 2 and 3 here, 11, 12, 13 through here, and then have an A, a B and a C through here, some sort of corrective swing anyway, and then move up from that point through there. So yeah, that's what we're looking at. So possibly the triangle's finished and we're sort of moving along, and in Europe's the same as well, except for the FTSE here as such. The FTSE's got more of a downtrend, very much like the ASX 200. It's a little bit sort of dodgy to count. It cleans up a little bit better if I just put it on a line chart there, and I can start to sort of see things a little bit there. We can look at 5 waves down through here as wave 1 or the A wave, and ABC back here for 2, then 1, 2, 3, 4, 5 down here as the 3rd and the 4th across here. And this does count 5 down to here, but it's just not clear. When I was looking at the if I look at the, just bear with me, if I look at the FTSE, not the 100 here, that's the 100, that's what that pattern looks like through here. So I'm sort of considering, if we're going to get a rally on the S&P 500, then we'll be lifting off from here. But it's the FTSE 250, the 250 that interests me the most, because it's just running a little bit more square. That's the medium level here of 1150 through here. So that's so we've got pretty much, which is a medium level through here. So we've got support on top of group 1 here of the 11.3, and this move down through here has got an equal swing above and below. Yes, it can be 5 waves, and we could end up with something like this as such through here, more of a sort of a flat correction before we sort of push up through here. So that will be interesting from there. But even so, if it is a bear market from here, then this would be down for 1 and back for 2 like that. So we would catch that at the right time. So we're still going to have that same sort of pattern, either bearish or bullish through here, because if it's the A, B, C, then we'll be pushing up from that point. So it hasn't rejected this level just yet. So that's why I'm considering it to be possibly still bullish, but we just really got to wait for that. The DAX is a little bit more formed in terms of it's got more of the shape of the S&P 500 as well. So what we can say for the DAX here is that the 11,000 is definitely the line in the sand. So let's just see how it treats this particular price point over the next, over the week ahead. If the S&P 500 is going to push up, well, then this is obviously going to push up as well, and we can also count this as the triangle pattern in line with the S&P 500, but we can also count it as an A and a B and a C wave into here as well, and up for 1 here and back for 2 here. But once again, if this low comes out here, then there'll be problems there. But we would see a rejection before that. But let's see how this handles the 7,000 this week, and how it pushes up. If it pushes up through there and follows the Dow and the S&P 500 up. So we're facing Wednesday and Thursday. So in a bullish cycle, the Wednesday is like a V-shaped day, and Thursday is the bear day. So it wouldn't really be until Friday and Monday that we'd actually see the push up, because we'd have to see the 5 completed waves up here, a little ABC back, and then a push up from that point there. The Australian market, the ASX 200, the cash market here. Look, it's really obviously the 4,300 is the line in the sand, which is the top of minor group 1, so it's got significance. The move down through here does count as 5 waves to the downside here, and then yesterday we've got 3 waves back. Not yesterday, over the last couple of days we've got 3 waves back here, so we've got a corrective wave. So we are seeing impulse waves to the downside and corrective waves to the upside here. So we do have that, even though it's trending down and it's got impulse waves to the downside, but I still feel that it's a corrective move to the downside. The subgroup 1 here, the 10, 20 and 30, they're really holding the price to the closest largest number, and that's its job. If it finds support on the 43.30, well, then it's got a bit of freedom at that stage. And the same with the downside as well, with subgroup 2 here, the 65, 72 and the 80. The 72 here is really important because it's the 272. So while the market's above the 272, it's going to be supported, and trading in this particular trading around a large number is dangerous anyway. Then you've got Group 1 holding it to that price, and you've got Group 2 holding it to that price as well. So we're not in a position to range just yet. And I also think too, as I pointed out on the FTSE 250, is that this whole leg down here can just be one leg of the correction. And normally with swings as well is that the distance above here is, in this case, nearly 100 points, can also be the swing below down here as well. So it can come lower down here to have an equal swing across this particular level here, which is important because it's the top of Group 1 here. So look, it's just really going to be messy here. It's not going to produce the best trades from this little area here just yet. We'll need to see more consolidation in here, and then we would need to see either this is support or this is resistance through here. So be very careful in that area there. The commodities are mixed with nickel and copper to the downside, and tin and lead and so forth to the upside. So there's not any sort of strong leads from there. The Australian dollar's a bit weak, but as that comes down, obviously that's going to revalue the share market as such. So it's also going to be holding it to this price as well. Let's have a look at the commodities. Just starting with the US dollar here in terms of the wave count that we've been tracking through here. We've got this long third wave in through here, and we're looking at this ABC for the fourth wave here, and we're looking for the fifth wave down. Now we can have the fifth wave in play here already. We can have the low in through here. But we're kind of thinking this here as a corrective wave here. So we're still expecting a move down through here. Now, a move down through here would see gold push higher, probably up through the 1700. Would see the euro push higher as well. But in the meantime here, what we can do is we can say that the Group 1 here, the 10, 20 and 30, if support maintains and gets developed on top of 81.30, then it's going to be positive here for the near term anyway for the dollar. And that will cause weakness in the gold and in the copper and so forth, and the oil and so forth. So if it does find support on here, which is checking it out now, then we can expect it to move up to the 50, and that's going to push the other the commodities down somewhat. And if it finds support on the 50, then obviously we're starting to create a top in place for those commodities. So it's in a quite a critical sort of condition sort of here. So this particular pattern here is a little bit like this particular pattern through here, just another wave 4, so to speak. So let's just see how that plays out through here. But we don't have a clear answer if that's the low or we've got another low to come in through here just yet. But we can use the levels there. So a move under the 81.20 as resistance there would pretty much confirm that we are going down at that point there, because it's the pivot within Group 1. So that said, the gold market here, we're looking for this move up through here, and we're looking this in terms of an A and a B over here as a triangle through here, and then a C wave up through here. There's normally equality in these things, so we can say from the A wave here, if we took that there to the E wave there of the same sort of length. So we're kind of there anyway, and there'll be some other Fibbo numbers that relationships that add up through there as well. But the main point is that we're counting 5 waves up, and then this is the top of the third here, the fourth and the fifth up here. So we're just sort of splitting hairs really. But that 1700 up there is pretty much a topping area. Even though that it could go high, it could push if the dollar pushes down. Well then we can go up to above the 1700 here. But as pointed out the other day, that we could see this range here was long, then this one's getting smaller, and then this one's getting smaller. So we knew that it was getting sort of weaker at this stage. At this stage here, there's just basically no sellers there. And all the buyers are in as well. So there's not a lot of movement there, and that will be the same with silver as well. With silver, it's just a little bit easy to count here. We could see that as a fourth wave here coming back into the 32, and we'll see a fifth wave move up here a little bit higher, and then we'll see a larger correction unfold here. Will this be the top? Well, that's something that we need to look at when we get there. We need to see what structure unfolds next for that. And the copper market as well. The copper market is, there's degrees of structure, of course, but you know where we are in the triangle picture that we're looking at here. It had the same pattern as gold, by the way, this here, but it just didn't take off. So it's really dragging down because of the China thing. So, but we could imagine that if it found support on the closest largest number, the 350, the midpoint, then it would be strong from that point there. But it's the supply's moving down, and the resistance is following that there, so there is resistance there. Between the next level down is the 330. So and in between that, the midpoint would be the 40 there, and then above that would be the 345. So when we're looking at the 340 here and the 350, then we've got the 345 here. So we can say that yes, it has got resistance up here. That's fair to say that, but once again, but it's also above the 340 and it's also above the 345. So if it moves down below the 345 and finds that as resistance, then we can consider it weakness at that stage. So that's something that we can look for. So what we can do is just say, while it's above 345, it's supported, and if it breaks below that and finds that as resistance, then we would have a bearish bias on that, which of course would reflect back into the material sector. So that's that. The oil market, the little 5 waves up have been completed. The 1, 2, 3, 4, and then another little 5 waves up through here. It didn't go as far as we thought it would go. The move down here certainly looks impulsive rather than corrective, but while it's sitting above the 95, we'll treat it as corrective. So 90, back to the same story again. While the 95 is support, then the bias is to the upside. And when we have a look at Brent as well, this is Brent here on a 4-hour chart here. We've had this A, B, C through here for wave 4, and then we're looking for 5 waves up. Now those 5 waves up can be completed here, but what we do need to see now is we need to see confirmation. So confirmation would be seeing the price reject the little medium level here, the 11.5 here. So and it hasn't rejected it yet, hasn't it? I mean, it's basically working through it, even though that we can count it as an ABC corrective here and up for the 5th. We can expect more corrective pattern here, but I just want to see if it actually just develops into something larger, like up for 1 here, back for 2, and then developing on here for 3, and then moving up from that way. So let's just give it some time. The distance above here will be the distance it goes below. There is a trend line support here, but it should come a little bit lower through here, but it is slowing down as well. So it should find support. So it'll have like 3 swings across here, and after 3 swings, if it finds support, then you know that the market's supported and will be going to the upside. If not, well then to the downside. But of course, it's just going to follow the S&P 500 as well to some degree. So bear that in mind as well. So, but a setup falling into place there shortly. So that's about it for the commodities. Let's have a look at the currencies. Okay, just starting with the US dollar again, but here you can see that it does have some sort of support up through here, but it will take about a session to, if that is a C wave up there as 5 waves, then we should be seeing a move to the downside after that. But it'll take a session to start to take shape here as well. So just keep an eye on that, and the euro to the upside as well. Looking at the daily chart here, we're looking for a top, as you know. We're looking for a wave 4. We're looking for the A wave, the B wave, and the C wave up through here. The C wave's always in 5 waves: the 1, the 2, the 3, the 4, or 4 across to here, and we're looking for wave 5 up. So we can have a top there. Let's just go into the smaller area through here. Now, this is the same as the US dollar index here. And because of the sharp move here, it's just a bit hard to work out. So we know we've got a wave 3 here and a wave 4 to here. We're not sure if this is the wave 5 to this point here, or we're going to get, or this is a 1, 2, 3, A, B, C for the 4th wave and a 5th wave up through to here. That's what we're a little bit unsure of. And if the US markets, the S&P 500 is going to push up, well, then we can pretty much bring that one over through to here. Now, obviously, in the larger picture here, long-term shorts shouldn't go into the market just yet because we're not under the 125. If we're under the 125, then we can start building a short trade, but it's not there just yet, and picking tops is dangerous business. But looking at this here, we've got the 125 as the major support in the market, so the trend up is supported, and we have to respect that. And just breaking it down into a smaller pattern through here, this is the 1 hour chart here. We've had a bit of a sort of support line through here, which is, I like to leave them in because they always seem to play out quite nicely, and that's coming in through here as well. So this can be a wave 4 because it hasn't taken out the top of wave 1 here. It's probably not the case. I'm not sure, but just breaking it down further, we talked about the 125. Now we're talking about the 125.50, the midpoint there. So as long as that stays as support, then the general gist would be up, because if it breaks the 125.50 here, then it'll drop down to here and it starts to become, more of a bearish pattern in that sense. So at this stage, let's just treat it as a bullish corrective pattern and expecting it to move up, hopefully in line with the S&P 500. So yeah, that's it. So while it's above that, then just allow it to play out. Also, too, if it's going to be bearish as well, then we'll be looking for 5 waves down here and 3 waves back up through here, and then down through here. But I would be tempted, if the S&P breaks above the 1410, I would be tempted to go long off this number here, off the 125.72 there as support, and then building a position into here, and then looking to build it in through here. And if it does come back down through here, we'll then take it out at that stage there. So, yep, that's that. So, and the Australian dollar is on track for in our large triangle pattern through here. We'll just try and break this down for you. So look, what we're looking for is from wave D, we're looking down for wave E here, and it should be in 3 waves. So we're looking for an A wave, a B wave, and a C wave. Don't worry about where they're positioned just at the moment, but just to have that understanding that there is going to be 3 swings. Now, in the A wave here, we're looking for 5 waves in the A wave. And as you can see here, we're into the 3rd wave here. So we've got down for wave 1 here, back for wave 2, and we're into the 3rd wave. So we'll be looking for a 4th and a 5th wave to come further down through here. The 4th wave can pull back 38.2% of the length of the 3rd wave through here. So with that general sort of pattern in mind through there, we've got the 2-hour chart here. Just squash this up a little bit. That trend line's gone a bit wonky there, so we'll just ditch that. Okay, so just squash that up a little bit. I mean, the way that you detect a 3rd wave is you grab the top of this line through here with parallel lines, and then drop it onto the low of wave 1 here, and that's what we were looking for. If you remember, we were looking for a clean break of this move down through here, and we knew that it once again it would come through and retest it, and it's done that. And this is all part of the 3rd wave coming down through here now. So we've got down for wave 1, back for wave 2, and we're looking for the 3rd wave coming down. This can be interpreted a few different ways, but we are looking for this wave 3 coming into the 102 area through here. But also, once again, to point out that we're coming into group 1, which is 101, 102, and 103. So coming down into group 1, as always, be it minor group or subgroup or micro group, it's going to bounce around a lot because naturally all the orders, larger orders, are sitting at the whole numbers. So that's what's going to occur there. So just sort of breaking that down into sort of the 1 hour chart through here, we've got This is 102 here, of course, and we can expect a bounce off here. But coming down into here as well is also Group 1 as well, the 10, the 20, and the 30. So it's going to find support in here as well. If it gets locked under the 102.20, well, then you'll see it feed down into this sort of area through here. The things that, if once we do find the wave 3 low, then we need to take a couple of things into consideration. The 38.2 retracement level, if we look at that, if we just assumed that it was at the 102, and it could be much lower as well, we just don't know what extension is going to come into wave 3 here. But if we took it at 102 here, then the 38.2 retracement level is here at the 272 area here, so that's important. But what does sort of bother me a little bit is the gap up through here. To be covered at some point as well. I mean, that can be covered after the ABC for the E wave of wave 4 is completed, and then get it from there. But we've just got to be mindful of that situation. The wave 3 low could already be in here as well, and if the S&P 500 is going to rally, then we may see this rally with it as well. We do have GDP figures coming out at 11:30 today, which can move the market around a little bit. They're expected to be at 0.09, which is a bit lower. So just be aware of that timing at 11:30 there. Either close out or set your orders up in front of the market for that. But the Australian dollar in here coming into number 2 here, 102, and in Group 1 here, you can't expect it to run very much. So it's going to be sort of sticky in there. If it comes back up and finds support on the 102.30, the top of Group 1, well, then it's likely to test the 50 from that point. And if it finds support on the 50, then we'll be retesting the 38.2 retracement level. And you'll see the 102.72 really, it'll really hold the market at this point here. But if the 102 here, if this comes down to this wave 3 keeps coming down through here and the 102 develops resistance, well, then we can start considering the $1 as the target point, and would see wave 4 play out between 101 and 102 through that area there. Alrighty, well, good morning and good luck. And just one more little thing as well is that Wednesday normally has the V-shaped day, which is down in the morning and up in the afternoon. So just bear that in mind as well. And Thursday would be the bear day, and Friday and Monday would be the up day if that's going to play out that way. But the volume on the ASX 200 has been sort of pulsing to the downside on higher volume and lower volume to the upside. So, but that could change, of course. That will depend if the break of the S&P 500 at 1410 occurs. So that's the real key to watch there, and the US dollar at 81.30. Good morning and good luck.